Hello, my name is Eddie Tofby. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stopped looking at my daily charts and instead concentrate on the longer term view using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me introduce today's longer term chart. Today I'll be looking longer term at UK feed wheat. This continues to be one of my favourite, if not the favourite, long-term chart. Why? Well, I have no other chart that has a 1975 to date uptrend, currently at 64.90. That is still valid. Just love that. I could also lather this long-term chart in long-term patterns, but I won't because it will obscure what is really going on over the last few years. So we'll start with how the market in 2021 dipped from its May 2021 high, making a bull hammer pattern in July. That saw support from both the 2 and 3 year moving averages, currently 237.85 and 216.5 respectively, plus the approach of the 5 year moving average, currently 192.30. I suspect that all but the 5 year moving average eroded the decline, and what the 5 year moving average did was to give a boost back up. Prices reached a short-term high in November, which at the time seemed extreme as it was an all-time high back then, but it was the bullish closing long white Mariposa in February last year and then the subsequent and substantial gap to the March action that really set the market on its way higher. However, such a steep rise peaked out in May with a combined key reversal down, bearish engulfing pattern and bearish opening long black Mariposa. Those 3 months, February, March and May, are really interesting as they broke up through the top of what I suspected might have been the big core pattern here running this market, and which now I am considering at retiring. It is the huge 2007 to 2022 ascending expanding wedge pattern, currently 109.80 to 302.70 and highlighted in dark blue on the monthly chart. The 2 monthly closes above it, despite the strong bearish pattern of the 3rd month, well, they seem to have caused irreparable damage that I do not think may be recoverable. I will keep it on the monthly chart for another year, but I am prepared thereafter to look at retiring it. Going back to the action in 2020 and 2021, all this action there left us with 2 potential topside targets at the end of 2021. I said a year ago, and I quote, if we consider the late 2019 action, that's up to the end of 2021 actually, if we consider the late 2019 action to date as a possible bullish halfway hesitation, which isn't fully certain, but still does have some merit as an idea, well, if we consider this, then we have a potential target, possible target X in the 245.85 area. However, this is a primary target. You see, I am inclined to disregard that long tail on the hammer pattern formed in July last year. So that's obviously the previous year. And instead utilize the low around the 180 area. In which case we have a higher secondary target X1 in the 264 area. Both are big asks, but that is what the current patterns look like. End of quote. Well, as I have already said, these targets, both of them, well, they were easily achieved. Anyway, since May last year, prices have fallen in a juddering fashion. Interestingly, peaking in October just under what was the broken upper trend line of the ascending expanding wedge pattern. It is this juddering fall that I wish to discuss now. You see, in Chicago wheat we have what appears to be a very thin, tall, narrow, head and shoulders top formed over 2021 to 2022. None such thin, tall pattern exists here, or at least I can draw an optimized neckline, currently at 280.10, which I have done, and you can see it highlighted in bright red, but it is really too steep. And I suspect that any real use of this may be we'll be just casting we'll just be seeing it chasing shadows here. But it's still there to look at. Thus, as prices are well below it, it will be opportune to lay out some potential targets below for this pattern. Should actually turn out to be a topping action and not a continuation pattern. Thus, a primary target X2 will be in the 193 zone, whilst the harder, much harder it seems, target X3 would be in the 143 zone. The primary target may, just may, seem possible, but the secondary target, well, that is such a ginormous ask. And why I only acknowledge because that is what it shows. There is one final thing I would like to discuss, and that is simply the gaps. See, we have a huge changeover gap back in early 2022. That is obvious. But we also have a small gap, 242.60 to 244.25, at the end of last year. The earlier big gap we can see has been filled. Small gap is still open. They do not align, but even so, one can look at the action from March 2022 to November 2022 as a possible derivation of an island top. Now, some may say I'm stretching the point, which I am stretching the point, but that's because I want to see all the options and opportunities out there. I want you to see all the opportunities and options out there as well. This is not a classic island pattern, but if it were, then the primary potential target X4 on the downside will be in the 171.90 zone, and a secondary, very much harder to reach target X5 would be in the 127.5 zone. In some ways, this last point and these last two numbers are pure conjecture, but I think I'll leave you with those thoughts for now. Thank you for listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Services International Limited. And here comes the final bit.